as a day trader, I usually look at my swing trades and I'm looking at intraday stops and so on. But again, when I'm swing trading, I have to really cut my day trading behavior and behave a little bit differently. Shlomo will discuss this today with you guys. It is very important for you to understand that swing trading is a different occupation than day trading. It helps you to be a day trader because you know a little bit more when you're swing trading if you have the experience of a day trader. And again, we're doing this for many years. We are managing our results just, and I'm saying just from 2008. I mean, that's 5 years ago. We started managing our results, and Shlomo will post it to you and show you what we have done and what we plan to do in the future. And we're having great results. So if you're interested to take our swing trades with us, you can do that. By the way, it's an extra cost. It's the cost of the swing report is $120 a month. But if you are in the day trading room, if you are a paying member in the trading room, it's going to cost you half of them to day trade and swing trade. Because as a day trader, I usually look at my swing trades and I'm looking at intraday stops and so on. But again, when I'm swing trading, I have to really cut my day trading behavior and behave a little bit differently. Shlomo will discuss this today with you guys. It is very important for you to understand that swing trading is a different occupation than day trading. It helps you to be a day trader because you know a little bit more when you're swing trading if you have the experience of a day trader. And again, we're doing this for many years. We are managing our results just, and I'm saying just from 2008. I mean, that's 5 years ago. We started managing our results, and Shlomo will post it to you and show you what we have done and what we plan to do in the future. And we're having great results. And Shlomo, are you ready to take over?
Yes, absolutely. I'm ready. All right, guys. First of all, sound check. 1, 2, 3. 1, 2, 3. Can you hear me correctly? Loud and clear? All right. Good for Ben. All the others also can hear me? All right. So here Nick can hear me, and Jim, and Antonio, and Mike. All right. So here we start. So first of all, hello. My name is Shlomo Cooper, and I'm a professional trader in the stock market and the head analyst in TradeNet, as Meir mentioned earlier. I'm really excited to be here with you today and to meet you all. The lesson we are going to do today is actually the first lesson, and hopefully we are going to upgrade it to a weekly lessons. And each lesson we are going to choose another topic that concerned traders in all time frames, in order to push you to be better traders, in order to share you with the best knowledge we have, and in order to sharpen the tools you are using in today's trading. Today's webinar is about how to poise your portfolio for breakout in 2014. And actually, we are in the last days of 2013. It has been a great years for the stock so far. In TradeNet, we have educated thousands of people throughout the years, and we actually changed many lives, helping people to fix bad trades and make a consistent profit. Think for just a moment about some of the losing trades you experienced in 2013. What if you discovered a way to avoid those losses for 2014? So with our unique swing methodology we are going to discuss later in this lesson, we have been able to make more than 320% on our portfolio in the last 5 years while taking minimal risk. We are going to share with you the system. We are going to show you how to use the system. Hopefully you are going to put your hands on it in order to capitalize in this time frame of the swing. Um, I'd like to take so I'm going to talk later on about our about the swing, about the methodology. I'd like to start talking. I'd like to start to introduce myself, my story to Wall Street, how I started trading, what are the obstacles I needed to overcome, and then I'll share with you my perception on the swing trading, what is swing trading for me, and we'll get down to the swing trading we've been operating for the last 5 years. So I opened my equities account, all right, and here you can see a photo of me. I opened my equities trading account in the US for the first time when I was 22 years old. It was about 12 years ago, and in the first 2 months I remember I earned $10,000. Hear it again, guys, $10,000 for a boy 22 years of age. I was at the top of the world. I thought that I cracked Wall Street, that I decoded the secrets of the stock exchange, and from now on, my life is actually going to be a garden planted with roses. Actually, at those times, I had a girlfriend, and I actually thought here I invented a printing machine, and whenever from now on, whenever I need some money, whenever I want to impress my girlfriend, whenever I want to go on a date with her, all I need to do is to plug my printing machine to the computer, just go online, go to my trading account, take a couple of trades, and here I am with couple of hundreds of dollars. 5 months later, I have to tell you, not just that I gave back all of my profits, I also lost another $20,000, and I realized for the first time that what I think I knew about the market, not just it doesn't bring me money, not just that I can't pull money out of the market, it creates a big hole in my budget, in my pocket. I still had a lot of motivation at this time, so I decided, I understand that I have lack of knowledge, so I decided to order any given book from Amazon, Amazon.com, about trading. I said to myself, if there is something I can know about trading, I want to know. I wanted actually to fill the gap of knowledge I didn't have. So during the following months, I read a lot of books on technical analysis, about trading techniques, systems in the market, psychology of trading, interviews with successful traders. I wanted to know everything there is to the world to show me about trading. I went back to trading, and surprise, I still kept losing money. Yes, it was on a much lower rate, but I still kept losing. I stopped and asked myself, why, after so much of effort I had put into reading and studying the subject, I can't pull money out of the market? Especially bothered me a thought that was there all the time. Here I'm losing money systematically, month after month, week after week. That means there is something basically wrong I'm doing. And if I would be able to pinpoint it, if I could spot it, if I could track it down, I would be able to fix it, and therefore to turn my trading wheel upside down and start pulling money out of the market instead of financing some other successful traders, for example, Meir. So I had actually two options at the time now I'm trying to recall it. The first option was to leave the trading world, to give up the dream, to give it up, to say, all right, trading is not for me. Probably it's for other lucky guys. I'm not one of these guys. But the second option was to learn from successful traders that make money in the stock market every day, how the heck they are doing it. To sit behind the shoulder of a successful trader and to see him taking positions in the market in real time, to hear him explaining each action he makes, to get into the mind of a successful trader and to decode it. That was the first time I really started to understand what's keeping me behind. This was the linkage that links between the theoretical material and the practical application. And you see this gap of knowledge or the gap of practical application in many other areas, in many other fields. For example, if you are learning to be a doctor in the university, after learning it, after getting the degree, you are not going to be a heart surgeon, right? You are going into a training period. If you went to school to learn laws, you are not going to defend someone in a court 1 month after getting the degree. You are going to a training period. And the same thing is about the market, about being in trading. I understood I need a training period. Due to the fact that my family is originally from London, England, a contact has been made between me and a successful trader that trades stocks in Wall Street for many years. He has his offices in the center of London, and after a couple of weeks, he agreed to be my personal mentor. So that's how I found myself one day living in my grandparents' house in London and go to his office to learn the professional trading. The first thing he did was to clean my head of all the truths and beliefs that I thought they are true about the market. These are a set of beliefs, I think, that many novice investors and many novice traders hold about the market, but they come out as a pure fault. For example, the idea that stocks are going up over time. And this is maybe a good time to ask you guys this question. What do you think? And please share it with me right now on your keyboard, because I can talk, but you can talk to me as well through the keyboard. So what do you think about it? Do you believe that stocks are going up in the long run? Do you believe that if you hold stocks enough time, eventually they will go up? Or in other words, do you believe in buy and hold strategy? Come on, share it with me. All right, so Ankit say, I don't think stocks always up. Jamie say they can continue down also. All right, that's interesting, Jamie. Noah, ooh, it's running fast. All right, the chat is running fast. That means you are here. They can continue down also. No up, down, or flat. All right. It depends on the stock. No, every stock is going down. I believe what the chart says to me. All right. Seraphine says go up, go down very fast. All right. So there are a lot of ideas, a lot of notions here in the chat room. And I want to tell you what I told him, what was my answer to this trader. And my answer to him was, of course, stocks are going up in the long run. I told him that all the economical studies I was aware of showed that the stock market's performance outperform any other market in the long run. And therefore, a buy and hold strategy should beat any other strategy in the long run and therefore be positive for my portfolio. He told me, guys, actually He shouted at me, "Have you gone mad? Stocks not just they are not going up over the long time, over the long run, they are declining over the long run." So of course there are stocks that you can point of them that if you had bought them at a certain price and hold them for many years, at some point in the future they would have valued much more. But do you know that there are more than 10,000 stocks in the stock exchange? 10,000 stocks that being traded every day. 10,000 stocks. On how much of them do you hear? On very few. Maybe you know IBM, Boeing, Cisco, Intel, Lockheed Martin. We all know them. We trade them every day in the trading room. But what about all the others? There are thousands of stocks that you don't hear about. Do you know how many stocks in the lifetime of the market had went to zero? How many stocks are not traded anymore? How many stocks are not enlisted for trading anymore? How many stocks of companies who had gone bankrupted? These are much bigger figures than those who have survived the test of time. So if take into account all the stocks that have been ever traded, stocks are going down over the time. They are not going up. Now, if we are going to just take a glance on the chart we have here, here we have the SPY. This is the ETF that tracks the S&P 500 index, and I'm going to show here, all right, so the Colmex software can give me the option to cut the date to a time frame I want. So I want to show you what was the performance, what was the behavior of the market in the first decade of the new millennium, from 2000 till 2009, the first 10 years, the first decade of the millennium. So we'll put here the 1st of January 2000 till, all right, till 12, this is December 31st, 2009. This is the first 10 years. All right, okay. Now I'm going to show this information on a monthly basis. That means each bar is going to show us information of 1 month. Here started the millennium. This is the end of the first 10 years, and surprise, surprise, the market went down over the first decade of the millennium, not up. Actually, this is against what the banks in Wall Street has taught us, because they taught us that the market can go up, and every year, or almost every year, the market is going up. And here 10 years, which is absolutely, no one is going to argue that 10 years is not long time enough, is not a long term, and in the long term the market went actually down, it went up. His answer, the answer of this trader, totally undermined all the concepts I thought I knew about the market. And so on, concept after concept, idea after idea, belief after belief, he just broke into pieces. This is the point in time that I can pinpoint today to be my turning point and the start of my real construction towards a successful trader who pulls money out of the market consistently. Now, if we will just go to the slideshow, part of the beliefs he cracked into pieces, you can see here on the slideshow. So if we are going to review them very quickly, the first one, and I'm not going to discuss each one, maybe in later lessons, but right now just think what's your belief on each statement. So the first statement, the stock market beats any other market over time, therefore buy and the whole strategy always wins. We have just discussed it. The second statement, a rising stock indicates that there are more buyers than sellers. A descending stock indicates there are more sellers than buyers. So guys and girls, I want to surprise you once again. For if we want to have a price on a stock, there are buyers equal to sellers, the same amount of buyers and the same amount of sellers at any given point in the market, at any given point on the stock. The price is a handshake between a buyer and a seller. So there is no way there is more buyers than sellers or more sellers than buyers. So if the buyers equal the sellers at any given point, how stocks can go up or how stocks can slide down. Maybe we'll have a chance to talk about it in the upcoming lessons we are going to do. Let's go to the third notion. If the stock market rises, everybody is happy, everybody is winning. What do you think about it? Fourth one, in order to beat the market, you must forecast correctly the market's direction. This is nonsense, I have to tell you, because you don't have to know what the market is going to do next in order to make money. You must have a trading technique. You must have money management. Money management, maybe we'll have a chance to talk it later this lesson, is actually responsible for 80% of the bottom line you have in terms of profit and loss on any given trade. Let's continue to the fifth idea here on the slide. If I lost money on a transaction, it can't be a winning deal. If I took money on a transaction, it can't be a failed deal. What do you think about that? All right. And the sixth one, the institutional money has an absolute advantage over the individual trader due to the fact they have supercomputers and huge budgets to put into sophisticated computer programs and access to professional knowledge. So one thing about this one, yes, the institutional money, the big guys, they have absolute advantage over us, over the individual trader. But we have a very slight a slight relative advantage over them. All right, they need to deal with big money, with millions of dollars. So that means if they want to get into a stock or if they want to sell a stock, it's going to take them a lot of time to finish their trading plan. Whereas when we want to get into a stock or to get out of the stock, we usually are trading between a couple of hundreds of stocks till a couple of thousands of stocks, not more than that. So one click on the mouse and you are in, you get all the stocks you want, another click on the mouse and you are out. So we are as individual traders much more nimble than the professional traders, than the institutional money. We need actually to understand the niche we are operating in. We need to develop it, and we need to establish, we need to create, we need to create trading techniques that are taking the advantage on the relative advantage we have as small traders. We also are going to talk about it in the next lesson. Later on, after being educated under this mentor for 6 months, I moved to the US, where I learned for the Series 7 exams, and these are the exams of the NASD, the National Association of Securities and Dealers. These are the exams that qualify someone as an American broker. I worked for a couple of years in a trading firm, a very big trading firm in Wall Street, on Broadway Street, and not far from the monument of the Bull on Broadway Street. I guess most of you know it. This is my story. Not questions. There is no question that I established myself as a professional trader in my years in Wall Street. Most of the techniques I learned there, I'm not using anymore in today's market because the market is dynamic, the market is changing all the time. So that means that we as traders need to adjust all the time. We need to adjust our tools. We need to adjust our trading style, our trading techniques. But the very, very basics, the very, very fundamentals of what is mean to be a trader, I gathered there, and this is the basics. And if you have the basics as a trader of 2013, a trader of 2014 have the same roots as a trader of 1,900 Av. The same trader of 100 years ago is the same trader as today. Yes, the colors have changed a little bit, but the picture has not. Let's talk a couple of minutes about what is successful trading. And I'm here in the room, and Meir and Ram, and you'll meet lots of successful traders. And among successful traders, make no mistake, there are different styles and different techniques. Among 1,000 successful traders, there are no two identical traders. There are many ways to pull money out of the market, but at the same time, you will not find two identical successful traders. All successful traders have the same line connecting all the dots. They have common factor. What is the common factor of successful traders? They have a system. They have a system. They have a set of successful rules they learned in the past, but that's not enough in order to be a successful trader. They also know how to implement, how to make it run for them in the market, how to apply it into the market. So if I had to describe what are the ingredients to a successful trading, I would designate a couple of things. First of all, they all have a system. So the first question you have to ask yourself is, what is your trading style? Are you a positioning trader who tries to capitalize from movements on the long run? Maybe you are a swing trader who looks for attractive setups on the daily chart. All right, so you want maybe as a swing trader to capitalize on movements that goes anywhere between 2 to 5 days, or maybe you are a day trader who is sniffing around in order to put his hands on setups in order to capture intraday moves, like we are doing here in the room. Maybe your trading style is a combination between couple of time frames, and I actually think that the ultimate trader is the one that can master couple of time frames. I, for example, a day trader, I also a swing trader, I also a position trader. So I control couple of time frames, and as we know, one of the famous advice in the investing world is don't put all your eggs in one basket. So that means for an investor, don't take only one stock. You like Microsoft, but maybe you should take Oracle, and maybe you should take IBM, and you should diversify your portfolio between couple of stocks on couple of different sectors. But for us, as traders, that doesn't only mean we don't want to have only one trade in a trading day. We want to have a couple of trades in order to be much closer as we can to the average of the system. But it also means you want to diversify your capital on couple of trade on couple of frames, couple of time frames, like swing trading and day trading on the daily chart and trading on 5-minute chart, for example. So, but no matter what, the first thing you have to do if you are on the quest towards a successful trading career is to identify who you are, what gives you an excitement and pleasure, and even more important, what trading style fits your characteristics, because you are not going to change who you are as a person. You are not going to change your characteristics in order to fit the trading style, all right? So take a trading style, find a trading technique that fits who you are as a person. Second is the second ingredient in a successful trading is a system. Do you have a system? Because every successful trader has one. The best will be to write it down, but it's not a must. Meir, although I believe he may deny it, also has a system. I have a system. Carl Icahn has a system. Also, Mr. Buffett has a system. A system is a set of rules that wrap everything as of what is your stock universe, what is your trading technique, what the tools you are using in the market, in what time frame you are trading, and what is the money management you are implementing. So after deciding what is your set of rules, what is your system, you need to understand what is your territory in the market. And by that I mean, what is the best time for you to act? For example, most of us here in the room are day traders, but the stock market in the US opens at 9:30 and closes at 4 o'clock in the afternoon. So that means we have 6.5 hours of trading time, or in other words, you have 6.5 hours of opportunities. There is absolutely no need for you to sit in front of your computer so much time. I teach my traders to act within a time window of 90 minutes. This is all the time you need to devote, 90 minutes. So play 90 minutes in the market, and then you can go to play golf if this is what you want to do. What is the best time for you depends on your characteristics. If you are a momentum trader, probably you are going to act in the first 90 minutes of the market when we have all the energies, all of the dynamics come into the market. If you are a more conservative and quiet person, maybe you will want to act only 1 hour after the open bell, when we see the transition from momentum trading to trends trading. Remember this, trading is about flexibility. You are the king of your castle. You are the master of your domain. You are bringing trading into your life and not vice versa. And if the best time for you to trade is the last 2 hours, go for it. You'll find lots of opportunities there as well. So, after that, after understand who you are as a trader and what is the best time frame you need to act, then you'll have to put your hands on proved and successful trading techniques that fits your characteristics. There are many trading techniques. Most of them don't work. Don't waste your time or money on them. In the following lessons here in the trading room of TradeNet, I am going to share with you not only one, but a couple of successful trading techniques. So if you are going to be with us later, you are going to learn a couple of successful trading techniques that we are using as professional traders. So for example, if you are a momentum trader, you'll be able to use the 1 minute chart at the beginning of a trading day and trade what I call the first trade of the day. While if you prefer to trade the last 2 hours of the day, and that's fine too, you will probably would like to use a technique I call the last trade of the day, which tries to capitalize on the last movement of the institutions and funds. After having a trading style and a suitable proven technique, you'll have to get to know the tools in trading. That may be special scanners to find the next opportunity in the market, tools on the chart that are being used with your techniques. Maybe your trading technique is using the RSI, the stochastic, so all sort of oscillators. Maybe you like to use the moving averages, the VWAP, the pivot points. There are all sort of tools you will need to know to use. And then the most important factor is your money management. I don't know if you realize that, but the bottom line you have on a trade, the P&L, the profit and loss, 80% of it is consisted of how did you behave with a stock after you enter the trade. I repeat it. The most important factor in a successful trade is not the stock, is not the entry, is not the technique, but how you manage it after you decided to open a trade. All of these elements, guys, are part of your system. And then after you have a system, after you control your system, the third ingredient for successful trading is the ability to implement it. There you have put considerable amount of time and effort in order to assemble your trading system. You have a set of rules. You know the material, and here comes the time to apply it all to the market. The biggest obstacle for a trader, the biggest enemy for a trader is always himself. Once we are in a trade, the emotions are switching on. We will need to talk about psychology and practical methods, how to cope with our emotions in order to cut the heads of these demons in other lessons. But this is, of course, very, very important of successful trading. On every and each element we are going to get in depth in our following lessons. Let's go and talk today about on one trading style we call swing trading. And you know, it's been a great deal of debating as of late going on connected to whether or not swing trading is safer than the traditional form of day trading. And actually, I find this argument fight interesting simply because my view is very or somewhat vastly different from, I think, a lot of the individual gurus in this industry. I have not only different views in terms what swing trading is, but I also have different views in terms of what day trading is as well. So just that we open up on the right footing, and before getting down to what is the swing system we are using in the reports you are getting each morning, so just we have our terminology down and uniform, I'd like to share with you what is my definition of swing trading is. But before that, maybe you can share it with me. What is swing trading for you? How would you describe swing trading? So Ankit say, I'll go for day trading. All right, so maybe Ankit is not a very big fan of swing trading. Jamie tells us that swing trading for him is a trade you hold for a few days, all right. W4 says few days to weeks, all right. Mike from Maine says holding positions overnight, all right. So absolutely swing trading involves holding positions overnight. So there are lots of answers here in the chat. All right, so you are all right. So all right, Noah says hold for longer periods of time, either all day or 2 to 10 days. All right, Noah. So you are very close. And let me tell you, or let me share what I think swing trading is. So for me, swing trading is a subset of a broader category called day trading. So swing trading is part of day trading. We can't really divide swing trading from day trading. It involves holding the stock anywhere from 2 to 5 days. Now, oftentimes a swing trade can last as long as 10 days. And if you are holding a stock for 10 days in your swing trading account, that is a good thing, because that means you are making profits, you are making money on this stock. This is the reason why you are still in this trade. But on average, it's about the 2 to 5 days trade. What's interesting about this style and the philosophy behind it is that it helps you to capitalize on a market niche that, on my opinion, is largely overlooked, largely ignored by some of the more bigger players in the market. Consider this. The 2 to 5 days time frame is too short for those very hectic schizophrenic day traders who typically don't hold stocks overnight. And at the same time, it's too lengthy for those traders, it's too short for those very large institutions to take advantage of. So actually, two of the most dominant market groups in existence in today's market are really not involved in this 2 to 5 days time frame. The big guys, the institutions, the fund, they cannot maneuver quick enough for the 2 to 5 days time frame. And ask the traditional day trader, what, me, hold the stock more than 5 seconds? So here we are. The swing trader operates in this void. This is the void of competition. He's operating in a time or a pocket in the market that really only has as participants uninformed market players. And that spells for me opportunity. It should spells for anyone here in the room opportunity, and we don't want to skip this kind of opportunity. My traders have heard me many times before saying that successful trading is nothing more than the mission of finding two groups of uninformed market players, those willing to give you their merchandise too inexpensively, and those willing to take it off your hands at price you know is too expensive. So in reality, we are taking advantage of ignorance. To be more specific, we are taking advantage of two emotions at work: fear, accentuated by pain, and greed. Those are the two emotions we are taking advantage of. And I'm a firm believer of the fact that we actually do not trade stocks. We actually trade people. We trade against two dominant emotions we call fear and greed. And to really drive this point home and understand it deeply, it's interesting to note that there are only three emotions at work in the market period. And it's up to you to become a master at pinpointing when one emotion is turning into another emotion. And when you really understand it, you got the game conquer. The three emotions are fear, greed, and uncertainty. When the dominant market players are uncertain, stocks tend to do what? They are going to, we call it, to go nowhere, to go aside, to consolidate in their price. Basically, vacillate, basically vacillate between between relatively predictable price range. When fear is the dominant emotion shared by the dominant group in a stock, the stock obviously goes where? It goes down. And when, of course, the majority of the individual players in an individual stock are experiencing, we have the grid there, that's obviously when stocks are rising. Keep in mind, guys, keep in mind, please, that the equity market, the stock market, is a wealth creating mechanism. Very much unlike the future market, and I don't know if there is anyone that trade here the future market, but the futures market is really truly a zero-sum game. And actually what Ankit tells us, we hunt for money, you are absolutely right. Now, the futures market, if anyone is trading the futures market, this is a zero-sum game. Now, someone might even call it really a minus-sum game when we add commissions to the factor. But what that really means is that the futures market is a wealth robbing mechanism, while the equity market is a wealth creating mechanism. And this is incredibly important to understand before we actually dive into some of the material I prepared for you today. And I'll explain why. In the futures market, everyone is contributing to the pool. We have a large pool, and if we were all future traders, we have to pull our money out, each one of us to take the wallet out and add the money to the big pool. What this means is that whenever individual wins, he has subtracted wealth from the pool, from the public pool. In other words, in order to have a winner, we must have a loser. Now, a lot of people are easily assume that this applies to the equity market. Well, let me be very clear and very direct about that. It does not. See, the futures market takes wealth from someone else when you win. The equity market creates wealth out of the air. And let us think, for example, if for the next minute, let us think of the next scenario. I buy stock at 10. I sell it to Noah for 12. She buys it 12 and sell it for Sam at 14. Sam takes it at 14 and sell it to Barbara at 16. Who lost in this scenario? No one lost. Barbara says what she bought at 16 to Sam for 18. He sells it then to Rose for 20. She buys it at 20 and sells it to Ron at 22. No losers. Ron sells it to Sandy at 30. Sandy sells it to, well, we got 30 and Sandy bought the stock at 30, but she can't find anyone for 31, for 32. She can't find 33 or 32 and a half. Sandy is looking for a greater fool, but there is no greater fool in the arena. So then she realizes that she actually made a mistake. And now what was greed now starts to convert itself to the emotion that we term uncertainty. From uncertainty, fear starts to creep in, and it sits on her shoulder, on her right shoulder, and the fear says, "Do you remember the last time we hang around?" So what happens is this individual recall and say, "Oh yeah, I do remember, and it wasn't such a pleasant experience. So she starts to see if there is someone to take the stock at 28 for a loss. She says for someone at 28. Someone at 28 looks for someone at 29, and not being able to find one for 29, he feels that he's made a mistake. His greed has turned into uncertainty as well, and now he is selling at 26 for a loss. Someone take it at 26 and sells it at 24 because he can't find someone for 25 or 25 and a half, and the process reverses itself. Our job, guys, is to find out, or I'll say it in other words, our job is to be able to pinpoint when the last person has trapped himself. That is the guy I want, that is the guy you want. Because what I want to do is to squeeze his stock away from him. I want to create such a panic in the stock that it will cause him to search out exits from the theater he has entered, the stock theater at 25, 24. I want to push this guy to sell me the stock at the very, very same time he actually really should be thinking about what? About getting some more of the stock. All right. So this is the scenario. This is actually what is going on in the stock market. And now I'd like to move on. Wow, we are almost 1 hour. I'd like to move on and proceed to our TradeNet training report and swing system. And I'll, I'll give some time for questions at the end of the lesson, if that's okay with you. And our traders in the trading room receive each day, and you have it today in this room under the documents. If you'll see on the bottom right hand of your screen, you have a button called the documents. If you open it, you'll have you'll have a couple of links. These are links or documents that we are sharing with you as our traders, and you have here the TradeNet daily stock report. This is the most important thing to do ahead of the opening bell. All right, so each day you have to take this report, download it. It's going to be up a couple of hours before the start of the day, and this is your homework before the day is starting. As of next week, you are going to have this stock report in your email every day, couple of hours before the start of the trading day, and in the trading room and as part of the stock report, we are operating a very successful swing strategy. As you'll see for yourself in another couple of minutes, each day our traders get the daily stocks report that includes, among other things, our current swing portfolio, stock picks for the next trading session, and all the information you need to know regarding managing our current running trade. So let's start from the end and see the results of our portfolio. I'll just just bring the portfolio up, and I'll show you how you can download it to your computer. So I'm just going right 1 minute. Just want to broadcast my screen again. So start desktop sharing. Here it comes. Right, I want to have a nice big screen on it because we are going to see a lot of information. And here's the Excel spreadsheet, and please tell me if now you can see what I see on my screen, and this is our portfolio, the swing report, the results of the swing report. We call this swing strategy New York. All right, New York strategy. So Mike can see it, W4 can see it. All right, all of you can see it. All right. Okay. So let's first of all see. Let's have a brief view on what we are seeing right now. Every day you'll have this report updated. Here we have the date. This is the date the stock pick actually entered our portfolio. Of course, ahead of the start of the day, you'll have this stock pick in a special report. You'll understand what we are taking, why we are taking it, why we are choosing this trade. Here we have the symbol of the trade, the direction, long or short, and the share size. We will understand later on how we choose to enter with 500 shares or 250 shares. Maybe at sometimes we are taking 1,000 shares. We'll understand later how we decide this. Here we have the entry point. All right, so this is the entry point for the stock, and we have the next column, commissions. How much commissions we paid on these positions. Usually it's about $10. Part of you may pay more commissions, less commissions, so we are taking something in the average. Now, look that every trade we are going to divide into four slices. All right, so we have the next portion 50%, half. The next portion is quarter. Next one is 1/8 and 1/8. So the first target we want to reach will be on 50% of our position. The second target will be on quarter of our position, and so on the third target and on the fourth target. If we reach our fourth target, that means this is a very, very good trade we entered on, and we are making good money on this trade. On the right hand, you'll see here the profit, how much money we make, how much money we lost on each trade we took. Here we have the cumulative of all the profits. Right now, for December 2013, we took about 18 trades. On a monthly basis, usually we have between 20 to 22 trades each month. That means that all the performance you are going to see in a moment are not because we took one position and we hit the jackpot, not because we chose one position that made really, really well. No, we are making a lot of positions. This is an active swing trading. Each day, on an average, we are opening one new trade idea. So we are up more than $2,000 on during December. That gives us profits in terms of percents, more than 3.5%, and we are calculating it on a base fund of $30,000. Another important data here is the rate success. How many trades we suggested were turned out to be actually winners, and how many of the trades we suggested via our strategy were a failure. So right now we see 67% of the trading ideas during the month of December were up. By the way, $30,000 is just a number. So this is the amount I started my account in this swing trading 5 years ago. Also, Meir has an account in this size, so it's actually convenient for us to show $30,000. All the trades, all the stocks we are trading are with a lot of volume, are very popular stock. On average, a stock we are taking should have more than 1 million shares changing hands on a daily basis. So that means if you have a larger portfolio. For example, 100,000. We have a couple of traders with $200,000. You can use this system because the stocks are very, very popular stock, and they can handle a vast volume entering in. Also, if you have less money, your portfolio is smaller than $30,000, this a portfolio also suitable for you. You can manage it on 15,000. You can manage it on less than that, on 10,000. I really suggest to take this figure, to take this number, $30,000, because if you are making a nice profit on 1 month of 3.5%, if you have here on this total portfolio $10,000, so yes, you made a profit, but you can't really feel it. But if you have $30,000, so $2,400 after commissions, that is something nice. That is something we can actually feel. All of this trading system is very transparent. Transparency is our first factor. All right, our first concern is transparency. That means all the trades we took in this system you will have here in the Excel. So you can go to October 2013 to August 2013, and even to have here previous years 2012, even 2011. Here's February 2011, March 2011, and you can go back till actually 2008. Here's April 2008. This is the first month we actually started with this system. Let's go to see. Let's go here to see the total results. And first of all, I want to see a glance, one glance on the total results of the system. So here's the total results of 2013, and you'll have similar pages, spreadsheets for all other years. So at one glance, you can see what was the performance. As we can see, we started January up $826. After that, February $1,000. We have here, we had a nice gain in April, $3,400. When we go to October, this actually was the best month, $4,000, but it's not green all the way. We have here red spots, and this is very, very important thing to understand. No system is 100% correct, and part of a trading system is for us to have a loss, and that's okay, to allow a system to go a little bit lower from time to time if it knows to recover and go back again. So when I am examining a system like the swing system we are watching right now, the first key component I want to see, the first exam I want the system to pass, is to see whether or not the worst month I got compensate with the biggest month. I repeat it. I want the biggest gain in one of the months to compensate me with the worst month. So let's first of all find here the worst month, and absolutely no question about it, it was September. We went down 2,500 down. This is a little bit more than 8%, but there comes October. October actually was the best month, $4,000 up. Also we have April, $3,400 up, so that also could compensate us on the worst month in this year, 2,500. This this phenomena, we can see it we can see it once again, time after time in other years. If we take 2012, there we had 2 months in a red territory, and not a big deal. July was down $346. The best month in 2012 was June for 3,600, so no problem for the system to pass our exam here. For 2012, we made 44%. If we'll go back to 2011, this was a great year with 68%. Going back to 2010, 33% up, and 2009, 3% up. By the way, 2008, I don't know if you remember, that was the collapse of the housing bubble. That was the year when the S&P 500 lost about how much? About 40%. Our system actually benefited from the decline. It made more than 100% on 1 year. Actually, it was the best time, and that's because this year was for swing traders like a fast forward machine. It's like you take a movie and you are fast forwarding it. So the volatility was very high at those times, and this is how we were able to enter into short trades. And of course, the system not it doesn't only take long trades, it take also short trades. And when we opened the screens for the next day, the market plunged, and we had money on the floor, 20% down, 15% down. It was on a daily basis. So this is how this system fared along the time. We also have here the total swing results. This is a cumulative of all the results we have from April 2008 till October 2013. So we still need to update here 2 months of November and December, which were positive and from the beginning of this system, we are up more than 300%, 327%. This is very, very nice. Actually, this is great performance. By the way, we are using rebalancing on this portfolio. That means that every month we are taking money off the table and we are rebalancing the account and get it back to $30,000 to its base fund. Actually, if you are keeping your profits in the market, of course, the percent rate would be much higher. All right, so this is for the results. By the way, in the documents, you can go to. You have here. Show me the money swing results, and if you click on it, right now I put you a link in the chat. You just can click it and have the Excel I'm showing you. All right, so let's go now to one of the trades and see actually how it's being done. All right, and I want you to see all of the process from the report you get in the morning until the profits you are doing. All right, so once again, I want to broadcast you, and let's go to December 2013, this month, and we are going to track down, all right, this trade idea on CPB. It was mentioned on the 16th of December. That was the first trading day of this week on Monday. So here we see CPB. How we know to enter CPB? Very easily. All you need to do is to open the report you are going to get in the mail. This is our trading report. The trading report starts with the summary, what happened with the market last day, and a little bit of analysis of what happened yesterday's in the market technical analysis, what to expect from the market in the next day. We have here the economic calendar, all the major events on the economic calendar for the next week. Each day we are going to bold the lines that are on this day. All right. So we are watching the 16th of December, the trading report of Monday. Here we have the earning calendar. The earning calendar shows us the popular stocks on Wall Street that are going to publish their earnings. And of course, when 4 times a year a company is handing out its financials, its financial results, and on these days, Wall Street must have the verdict, or the stock is going up very, very fast, or the stock is plunging down. So we want, as day traders at least, to know which stocks are going to publish their earnings in order to try to have opportunities in these stocks. So this is also, you have for each week you have a new calendar. Let's go down to the portfolio, swing portfolio. This is how the portfolio looks on Monday. So we have here the stock, the entry date. You have here also the sector, so you can see where the stock is coming from which sector, long or short, what is the direction, the entry point, last price. Here we have the size, the stop area. We will look at it in a moment. All right, now I want to go to today's picks. This is the today picks for Monday. Pay attention, or make sure that you go through a couple of comments we have here, a couple of rules we are using for swing trading. For example, on Friday after 12 p.m. New York time, do not open new transactions, so just go over it. And here's CPB. This is how a stock pick looks like. So we have number one. Usually we are giving you between 1 stock pick to 3 stock picks a day. CPB, Campbell Soup, this is the company name. Entry point, if we have here a green background, this is of course a candidate for a long position. If we are on the right hand shoulder, an entry point with a red background, this is of course a candidate for a short. We have here a stop. Absolutely, this is a felony not to go on a trade with no stop. So we always must have a stop, and you'll have here on each trade a stop. And we have here the first target. We are using a scale. We are using a scaling out methodology in order to take profits out of our trades. That means we don't know what is the distance the stock is going to do in our favor. We don't know how much gains the stock is going to achieve. So we are using scaling out. As long as the stock is moving in our favor, we are going to take more and more profits. We are starting with the first target. We are not taking more than 1 target on a day. So if we have the first target, on each target we are taking half of what we have, 50% of what we have in the position. On the first target we are taking 50% of what we have at 41.40. Now, as you can see, the first target is very close. All I need the stock to do is to go from 41 to make 40 cents and to give me money, to take money at 41.40. Usually, we are engineering the stock picks so the stock can hand out money. The stock can get to its first station to write us a check on the first day. Keep in mind that swing trading involves or carries an extra risk, and the extra risk is holding the stock overnight. So that we want, if the stock is behaving in our favor, is going in our direction, the first very day we enter the stock, we want to take a partial. We want to take our first first partial, first target very, very fast, and that gives us an opportunity to look on half of the trade as a day trading because we enter the trade and in the same day we pulled out half of the trade. The second half is going overnight. Now, about 40 to 50% of the trade ideas we are entered are giving us partials, are reaching the first target on the same day. So 50% behave as day trading on half of the position and the classic swing trading on the second. Let's see, let's go on. The swing target 43.12. This is not a trading this is not a trading price. This just gives you an idea where we expect the trade to travel to. So if we have here 43.12, we think here we can see on the chart the trade idea. CPB have here a spike in the volume and is surging up. After a pullback, we want to take this nice hammer above 41, above the round number, which is an important number. And we think, or we thought at that time, if the stock is going to behave nicely, if it's going to behave in our direction, it will get here to the next technical resistance set at 43.12. Actually, I think it has already reached there in yesterday trading or the day before yesterday. Here we have the size. The size is full. Usually, you're not going to see here a number of shares. We are just using the terms of full, half, or maybe double. Full means that you are going to take 500 shares on our portfolio of $3,000. That means that if your portfolio is set to $60,000, full size for you will be 1,000 shares, and if your portfolio is set to $15,000, half of our portfolio, you are going to take 250 shares on every full size. So just adjust the number of shares in accordance with your portfolio. Here you'll have the risk reward ratio, which is actually the relations between the first target to the entry point and the swing target. So here we have a risk reward ratio of 3 to 1, which is pretty good. If we'll see how CPB actually fares from this trailing peak, so here we have the chart. All right, so I'm going to put here CPB. All right, we'll go to the daily chart, and this was the nice little hammer we took on, and we actually were able to capitalize all the way up. As you can see, it reached the last resistance. Right now, if we go to our portfolio, CPB is already with money in our pocket. When you have here position with an orange background, that means we've already locked money on this position. When we have here yellow background, that means this portion is still running. So we managed to take first position here 41.40, second position, quarter of our position at 42.72. Right now the last quarter is running in the market for 33.20. But as long as the stock is going up, we are going to move the stop up. So if the stop is set at the beginning of the trade below the hammer, as long as the stock is going up, we are going to use dynamic stop and to actually lock profit or to secure the stock below the last day's low. So it's very, very important that each day you'll do your homework, you'll open this report. Each day you'll have here a designation whether we reached the first target or not. You'll see here the stop area. Many of the stops are here dynamic stops. The stops are each day are updating in this report. So just be with us, just get the update through the reports we are sending you. This is how it looks like. Alright guys, so this is a short brief on our Spring portfolio. Actually, everyone that is a trader, it's very easy to get into this mix. It's very easy to implement it, and for you, it's like an engine. It's like one channel in your trading business that you can bet is going to make money for you while you are trading, the day trading in the room actively. So I want to first of all to ask you if there are any questions. So I just want to give some uh, some time for questions. All right. So no questions. All right. So Mike say, all right. Thank you very much. Thank you very much, Mike. Yes, Raul. One question. All right. So go on. And I'll give it time for one or two questions, and we'll end this lesson. And of course, we are going to have much more lessons in the next weeks. So Raul says, when do you exit? When do you exit? All right. So that is all right. So that is very important question. When to exit? I'll just bring back. Just all right. So I just open today's. Just open today's report, stock picks report. All right, the English report. All right, this is today's report. If we write it down, right. First of all, we have here the profit for December, a little bit above $2,000. You have here two links. Click here to download our results and click here to download the daily working plan. If you are working with our swing report, just make sure you click here to download the trading daily working plan. All right. All right. And we'll get this report. This report is actually made for our traders that implement this this swing system. And you'll see here, first of all the current positioning in our portfolio and realization table. For example, CPB, this is one of our holdings. We want to get T3 third target, 1/8 of our position at 43.65. So we have a third target for CPB. Whenever we have a new target, you'll have it in the realization table. If you have a tick under the partial T1, target 1, that means we reached the first target. For SYY, as we can see, it hasn't managed to reach its first target yet. All right. Here we have the working plan, all the trading ideas we are suggesting for today. First one is INSI, INCY for long above 50-50. By the way, this stock went in the start of the trading day, and we'll see next week how we deal with it. All right, thank you. So, thank you very much for being here with me for the last 1.5 hours. It was my pleasure to share with you part of the knowledge I have. Hopefully, we are going to have much more lessons in the upcoming weeks. Thank you very much for participating, and wishing you all luck and nice weekend for you all.